Hello, everyone. I just wanted to take a moment and really give a recap of our week one class. I mean, I've got to give everyone really a shout out for great work, a lot of great responses. I mean, I really appreciate the hard work. This is our class, and everyone's contribution is valuable to that success. Want to take a moment and thank Lydia again for going above and beyond for everybody and just scanning in that chapter one, making sure everybody was able to have access to that when their textbooks came in. So kudos, Lydia. I just want to take a few minutes, go over some of the key points of what we covered in week one as we move into our week two class. Now, we did touch on the accounting equation, and I want to make sure that we're familiar with that, but also one of the key things that we touched on was forms of business, because this is important because we're going to be touching on corporations. We're going to be looking at companies that have stock, companies that are required to issue financial statements. So I want us to be familiar with the different forms of business ownership. So make sure you take a few minutes, read through this, get familiar with these bullet points. There are more points to the different forms of business, but these are some of the key points. As far as proprietorship, we talked about sole proprietorship. You've got a partnership and you've got a corporation. So, and a proprietorship is generally owned by one person, and it's usually a small business. And then the owner receives the profits and also shares in the losses, right? So you have that unlimited liability there as well. Now, with a partnership, you've got two or more persons involved in that. It says here it's retail or service type business, could also be a small service type business as well. And then you have that unlimited personal liability. Now, more than likely, you'll find a agreement of some sort put together for the partnership. So that's another key point with that. We also touched on corporations. So you've got ownership. It's divided into shares of stock. So we're looking at stock there. And then we talked about this. It's a separate entity. So it's a legal entity which is formed under state corporate law. So in the state of Illinois, we've got the Secretary of State, where we're looking at that organization of a corporation. And then you have limited liability there. So those are some key points. It's good to become familiar with it. I have this slide. We got the other slides. You can jot down notes on it, but you want to make sure that you're familiar with these three. This will really help you. The other key point is the accounting equation. And this is really, we're going to be really looking at this quite a bit. And like I said, this is the mathematical representation of the balance sheet. So you've got the assets equals liabilities plus owner's equity. In this case, we got the stockholders' equity here. You want to make sure that you are familiar with this equation. I know we have our note cards. Jot down the equation. You have it there. Also, make sure you're reviewing the definitions of assets and liabilities and stockholders' equity. That's key to helping to understand a lot of the problems and the things that we're going to be talking about in this course. So make sure to have that. Hopefully the note cards and this video, it helps to put that together for you. Also have this slide. I think it's important to know this one. It expands off of the accounting equation, and we're really looking at, again, we're looking at a corporation. We've got stockholders' equity, and it digs deeper into that, what it's made up of. So we've got common stock, of course. We've got that retained earnings. We talked about that before, and and that's made up of, you got that net income. So you got revenues minus expenses, and then you have any dividends that might be paid out, and that would affect the retained earnings. So jot this down. You want to, stay on top of this, stay familiar with it. Again, if you have any questions with this, make sure to let me know. If there's anything that might be a little bit confusing with it, make sure to let me know that as well. And I'd be happy to go over some things. So I wanted to also touch on another portion that we looked at in our second class of week 1, where we took a look at actually some transactions, and we were looking at the store, the computer programming, I said store, service, the computer programming service that was started by Ray and Barbara Neal. And want us to just really quickly look at the first, I'd say, 3 transactions that were done here. The first being, you got the, now this is a corporation. Let's backtrack. So this is a corporation. We know that because we've got stockholders. And you've got Ray and Barbara. They decide to open the service. It's a corporation. And then they're investing in it. So they're buying stock. So they're exchanging cash for shares. So when we see common stock, they're exchanging cash. So they're investing $15,000 of cash, and in return, they're getting shares of common stock in the company, which is the computer programming service. So let's take a look at what that looks like. So you've got cash, right? So you've got an increase in cash, and then you've got an issuance of stock. So the way it's illustrated is showing what areas this affects when we're looking at the accounting equation. So when we're dealing with cash, we're affecting the assets. And then when we look on that other side of the equation, we're dealing with common stock, and we're affecting the stockholders' equity. The next transaction, they're actually purchasing equipment for cash. It's not on credit, it's cash. So we're going to see a change in the asset accounts. Really, it's a net, because they're not really, there's not a decrease in their total assets, but when we look at the cash is being exchanged for this equipment, which is of the same value. So it's $7,000 of cash exchanged for $7,000 of computer equipment. So it evens out as far as the total assets are concerned, but it does decrease the cash amount. So this really gives us an idea of accounting. So this is what we're doing. We're looking at transactions. And as we mentioned before, accounting is an information system. So let's look at one more transaction. So they're going to purchase supplies on credit. So they're not making a cash outlay. So we're going to look at how this will affect them, because they're buying on credit. So they're receiving the supplies. So they're increasing their assets, but they're also incurring a payable, which is a liability, because they owe that money. So they owe that $1,600. So this gives us an idea of the transactions. It's good to stay on top of and be familiar with the various, what really the accounting equation, and then the accounts that we're actually using and building on when we're going through the chapter. So this week we're actually going to get into T accounts. We're going to move deeper into transactions, but we're going to be working with the T accounts. So make sure you review this. I hope this video really helps you. Again, if you have any questions, don't hesitate to reach out to me. You have my contact information is there in the syllabus. You can email me. I'm here to help you in any way that I can. And again, keep contacting me with any questions or comments or concerns. That really helps to develop the class. And again, really awesome work. Great job in class. And I look forward to tomorrow's course.